Bonjour, Gardenia. Farmland chicken nuggets. Sounds good to you? Welcome to QAF Limited, where some of the food brands just mentioned were distributed from. Before we move on, do like this video. And once again, this video does not constitute any form of financial advice. Please do your due diligence because the market is not a playground, it's a slaughterhouse. QAF Limited is listed in the Singapore Exchange and is the manufacturing and distributing of bread, bakery, and confectionery products. It also has operations in supermarkets, cold storage warehousing, as well as trading and distributing food and beverages related ingredient products. These are the key brands under bakery, distribution, and warehousing. For the revenue segment, we can see bakery stands at 76%, followed by distribution and warehousing 23%, with 1% in investment and others. It is understood that the operations are continuous 24/7. As we can see, some of our familiar brands are being distributed fresh daily by large. QAF operates its businesses mostly in the Southeast Asia region, where 33% in Singapore, 16% in Malaysia, 43% in Philippines, and 8% in Australia and others. Let us dive into each segment of the businesses. For bakery, in Singapore, we can see a decrease in revenue in 2021 compared to 2020. In 2020, the COVID pandemic attributed a surge in demand for bread as most consumers stay indoors for safety reasons. This has recorded Gardenia Singapore a higher sales than the pre-pandemic level. Moving to 2021, the easing of COVID restrictions meant slower sales as more people are back to outdoor activities. The increased cost in flour, bread, manpower, and energy also contributes to revenue slowdown in 2021. In Malaysia, the COVID pandemic has prompted the Malaysian government to impose a second movement control order in the early part of 2021 due to a third wave COVID outbreak. This has caused production disruption in Gardenia Bakeries KL and its manufacturing partners, Bakers Manson Malaysia and Farmland Bakery, because of the 60% workforce ruling. In addition, for Farmland Bakery, the factory closure after a staff was tested COVID positive further compounded the manpower shortage in June 2021. December 2021, the torrential rain throughout Malaysia caused severe floods across several states. One of the factories in Malaysia was affected and had to shut down. The GBKL management had taken measures to mitigate factory shutdown impact, which included ramping up production in other factories, changing in product mix, and also temporary outsourcing of production to other manufacturing partners. As mentioned, the cost of replacement and reinstatement of factory shutdown do not have a direct impact on income statements due to most of the costs are being capitalized in the balance sheet. In the Philippines, despite market share contraction faced with new competition, Gardenia Philippines managed to secure more than 65% in the packaged bread category. Gardenia Philippines taps on digital marketing such as Facebook, Instagram, and YouTube to promote healthier bread that improves immunity. Through such market development efforts, Gardenia Philippines gained entries into e-commerce platforms like Lazada, Shopee, PandaMart, and GrabMart. As such, the number of distribution territories also grew. Lastly, in Australia, sales was a double-digit growth of 21% over 2020, despite the challenging year for Bakers Manson Australia in 2021. All states across Australia had lockdowns such as New South Wales encountered up to 4 months continuously and 6 months for Victoria. With that, major disruption in the supply chain could be seen from shortages of ingredients to increased transportation costs. The year in 2021 started strong in the first 6 to 8 months, where the increased ingredient costs came into play in the later part of 2021. Additionally, an unusual wet spring season in Australia caused a reduction in wheat quality Combined with strong international demand, the cost is expected to inflate by 20% in 2022. The group bakery segment revenue reduced 2% from 433.3 million in 2020 to 435.1 million in 2021. The group achieved exceptional performance in 2020 with higher demand due to the onset of the pandemic. However, revenue fell in 2021 due to increasing costs with easing of COVID restrictions across the world where more people returned to normalcy. EBITDA margin also saw a reduction due to higher costs of materials, distribution and transportation expenses, and utilities posed a significant pressure on the segment. Likewise, for the distribution and warehousing segment, 2021 was a challenging year for Ben Foods Group due to the COVID-19 pandemic. With supply chain disruption affected, a strategic approach to increase the stocks holding in order to reduce risk of stock-out situation and also maximizing potential market opportunities. The approach had led Ben Foods Group grow sales 4% more than in 2020. However, the food price escalation and operational costs will continue to affect the profitability of the business. With the increasing number of online grocery shopping, there is also increasing demand for cold storage warehousing. One thing to note is that the warehouse operations were affected by a major building restructure from mid-2021 to February 2022, where there will be a 30% capacity reduction during the period. Some points to take note if you are looking to invest into QAF Limited. Number one, as people are getting health conscious, there will be demand for healthier bread, such as wholemeal bread. Number two, wheat production will likely be affected and cost to rise, as we can see both Russia and Ukraine are top 10 wheat producing countries. Australia is ranked number 10 in wheat producing country as well. The ongoing pandemic has on and off affected the Australia trade operations as well. Number three, do expect higher depreciation costs moving forward in 2022 as the cost of replacement and reinstatement of the factory shutdown in Malaysia are being capitalized in the balance sheet. QAF has been distributing dividends for the past 30 years. As of 6 July 2022, QAF is trading at 84.5 cents with a dividend yield of 5.9%. Do like and subscribe to my channel if you find this video informative. And I'll see you again. Adios.